My name is Danielle Darling. I'm a financial advisor and certified divorce financial analyst at Resource One Advisors. Tonight, we are so honored to have Russell Investments here with us to present Women Wired to Invest. Thank you so much for taking the time tonight to make an investment in yourself and your future self. We are super honored to have Tina Downing, who is leadership at Russell Investments, another woman trailblazer who I look up to in this industry. She works with Russell Investments, and they have played a key role in helping American families build wealth. And tonight we are going to talk about specifically women and how women should be wired to invest and how you can create the future you dream of by building wealth in a pretty simple and straightforward way. So I'll pass it off to Tina. And again, thank you so much for being here tonight. We'll probably be just 35, 40 minutes tonight, and we'll let you get on with your evening. So thanks again for being here. And thank you, Tina.
Great. Thank you so much, Danielle. I'm really thrilled to be with you. And I have to say, I love doing these meetings because, I've been in the business for a long time. I was an advisor for many, many years. I am an investor now that works with my advisor. And, there's several things that we're going to talk about tonight. First, we're going to start with where we've come from and how far we have actually come over the years. Then we're going to talk about some of the myths that are out there and some of the things that you may be facing as you work with advisors, and maybe some challenges and maybe things to think about. And then we're going to talk about what is different about us and what we have to consider as we're thinking about investing and making sure that we are confident in our plan for the long haul. And then finally, I'll kind of review some questions for you, things at all ages. And, if you have any as well during this, don't hesitate. You have a Q&A box up here. Don't hesitate, or a chat box. Feel free to throw anything in the chat. And Daniel, if you see a question in the chat, just wave at me and we'll stop and we'll answer the questions. Sound good? Awesome. So let's first talk about how far we've actually come. Now, back in 1862, that's when women received the right and were given the right to own land in their own name. And a lot of this was because of the railroads, right? And so women fought for this right to be able to own land in their own name, especially when their husbands passed away, because before that they couldn't. And then we also started the first women's stock exchange because of the railroads and bringing them in, and they started really taking off. And we wanted to be able to own railroad stock. And so we really did actually have our own stock exchange just for us. In 1920, we fought hard for the right to vote. And it changed the way I believe, the dynamics of the political environment works today because we are such a voice in the economy today. Now, back in 1937, we did get a certain right to vote, but even before that, in 1920, we were given the right to vote, but only, not the right to vote, the right to divorce, but only for one reason, and that was for adultery. And you had to be able to prove that that's what actually happened. But in 1937, they actually added several things. The law changed to allow women to actually petition for divorce on other grounds, such as desertion or drunkenness or insanity, but still with proof. Now, the one that is really the most interesting to me, which is also the most recent, and this is the one that my mother actually had to deal with, and I did even at some point when I was very, very young and trying to get a loan for my first car. It wasn't until 1974 that we were given the right or really fought for that right to be able to have credit in our own name. So if you wanted a loan for a car or a loan for a house, or you wanted to get a credit card, you had to have your spouse sign for you. Now, I'm the one now that's probably more responsible in holding the credit cards than my husband is. So we have come a long way. But as we start to think about where we're actually coming in the economy and the amount of the economic impact that we have, it's huge. Today, We actually hold about $10 trillion, and we control about $10 trillion of the wealth in the US today. What's funny about that is by 2013, we're going to control over $30 trillion. We are a force to be reckoned with. By 2030, we're going to control 2/3 of the personal wealth in the United States. And so this is why you hear a lot of people trying to really figure out what is it that we care about, and making sure that we know, if we're Gen Xers or baby boomers, what are the things that are front of mind for us? And this is what advisors really need to think about and what your advisor should be asking you about. Is it inflation? Is it recession? Is it wondering whether your family, because of the economy right now, has enough to spend every single day? If you're younger and you're starting families, what about childcare? What about reproductive rights? What about job security and representation in government and housing prices? We have the lowest percentage of home ownership today than we have for many, many, many years. And we know that there's been a 42% increase in childcare cost alone. So as we think about all the things that are important to us, we want to really identify, what does this mean to us? What are we concerned about? And what do we need from the financial professionals and the experts in our life to get it today? We are a growing economy today. If you think about all of the education out there, over 60% of the master's degrees are earned by women, 52% of the doctoral degrees, and 57% of the bachelor's degrees. We are actually earning more degrees than men are today. And if you think about our vocation and our jobs, in 2019, we saw a huge shift in the number of women in senior management globally. That just in 2019 alone, it grew 29%. It was the highest number ever recorded of women in senior management positions. 87% today of global mid-market companies have at least one woman in the senior management role or in the C-suite right now. We also have become, a lot of us have become the primary breadwinners of the family. That's on the rise, is actually increased over the last years, according to the US Bureau of Labor, by about 38%. And then as you start to think about our marital status, unlike back in 1937, we have choices today. Marriage is becoming less and less common. Single parenting is on an increase today and continues to go up every single year. Women are heading the households. We had the majority of the single parent households, and there's many of us choosing not to marry at all. Same-sex marriage is approved in many, many states. And believe it or not, the rise in gray divorces with women over 50 years old is at an all-time high. Divorce rates, about 50% of the marriages today, is actually 51% is the last statistic that I showed over last week when I was reading. 51% of the marriages end in divorce today. Now we know, that women over 50 are getting divorced at a more rapid rate. I always kid when I have men in the room that the reason why is because we had to spend so much time with you at COVID. We were stuck at home with you for so long. Now we've had enough. So there are myths, though. There's a lot of things that I've heard, as an advisor, as a coach, working with people every single day, talking to clients like Danielle's clients on what are the myths out there and what do we hear in the communities and out there about women investors. Sometimes we get a bad rap. Sometimes I hear women just don't care about the investments. It makes me laugh when they say that we spend money irresponsibly. I spend a fraction of the money that my husband does. So as we start to think about these behaviors, we do think about money a little bit differently, which we'll talk about in a minute. We also hear that women don't like to take as much risk. That's not true. Risk awareness is important to us. Risk aversion is not really what represents us as a whole. We also know that women make strong investors. They like to count on also people that have expertise, people we trust to make sure that we're doing our homework, to make sure we're making the right decisions. And so as you start to think about some of the gaps, what are the things when we say that women think differently about money, Actually, the numbers do show that. So when we looked at many, many studies out there, we find that only 36% of women are currently investing today. So for all you young gals out there now that aren't investing enough, think about making this a priority. Being able to put as much as you can in your 401ks and your retirement accounts. You want to make sure you're getting the benefit of the matching, because some of the gaps we're going to talk about is necessary for you to be putting as much in as early as you can. 63% of men are currently investing compared to 36. We also know when we are asking men about their priorities, retirement and planning for retirement is the number one thing that they say about that. Well, when we ask women, we find that it's the family. And a lot of that is because there's a lot of demand on our mind space today. Many of us, are working mothers. Many of us are business owners. Many of us are the ones that are still doing the day-to-day care and making decisions for the family, managing the day-to-day expenses while still working and doing those things. Before I started traveling every day for work, I travel most of the week. I handled all of the finances in the house with paying the bills and making sure I was the one that picked up my daughter, to go to school and take her home. But what we found is that even when I started traveling, I didn't give up those duties. Many of you are in the same position. So we tend to focus on the day-to-day needs more than we do long-term needs. That really does have to change. Only 31% of women have actually met with their financial advisor before, compared to 59% of men. Now, both are low. We should be meeting with your advisors more, right? I know Danielle is, insistent about when she meets with her clients, what she knows about her clients, and making sure that we have all your needs actually, covered, and to understand what the priorities are every single day. We have to meet and we have to know about your priorities to be able to help. And the spending is, we start to think about the goals, really thinking about what do you want for the short term? How are you managing day-to-day decisions about your finances? How do you actually then overlay making sure that you're planning as early as possible for the future to make sure, the number one thing that women my age are concerned with, and it is a huge concern of mine, is not being a burden to our kids. I was just this weekend with my 90-year-old aunt, and she's thinking about going into a facility because she don't want to be a burden, not because she wants to be in a facility, but because she doesn't want anyone in the family to have to take care of her. Fortunately, she's been smart about the decisions she's made, and she has a lot of choices. But as we start thinking about this now's the time to think about it if you're younger. And if you're actually moving into the different generations like myself, our priorities change. And so we have to make sure that our financial plan evolves with what we need over time. We do make smart investing choices. When people say we don't like risk and we want to be more conservative, it's not about risk aversion, it's about risk awareness. We want to know what the unintended consequences are if we get something wrong. But 85% of the women, according to studies, believe that taking risk is worth the chance of reaping higher returns, as long as we understand what those risks are. We're okay with adapting to the markets and knowing that we have to stay the course. We're willing to take the advice of professionals there. 54% of women that are making over 200,000 are willing to take significant risk. So when you hear that, or someone asks you or just assumes that you don't want to take risk, make them define what risk means to them. And that's what's going to be important as you're talking to your advisors, to make sure that your advisor understands how you define risk. Is it, principal protection? Is it growth? Are you taking enough risk for what you need to do? Are you taking too much risk? There's a lot of questions around risk because, frankly, not taking enough risk has even, the same bad outcomes as taking too much risk. So how do you actually think about this and how to define it, and what does it truly mean to you? We also know that we do take a longer term view. We're okay with saying, okay, maybe things are going to be volatile for now, but what happens? Do we just stay the course? How do we do our research to make sure that we're making the right decision? And we actually do trade less than men do. So there was a study, a big study done with a major firm, and they actually looked at how many times that men traded in their accounts and how many times that women, and women make 4 more trades a year than women do. Now, you would think that you're going to make those trades to get more return, right? And a lot of times when I talk to clients and when I did as an advisor, there was some assumption that if you're moving in and out of the market, you might make more money. But the reality shows that women actually outperformed men. And why is that? Because you have to consider the taxes when you're buying and selling, especially in taxable accounts. You have to consider the cost. You have to consider taking a chance to getting out of the market when the market is about to move. There's no way to predict those things. So how do we actually stay the course? And being able to stay the course has meant more for us in returns than it has our male counterparts. So kudos, ladies, for making right decisions there and staying the course and not making emotional decisions like sometimes people think we do. Now, there are regrets when I talk to women every single day. There's a lot of regrets and really what, the decisions that they've made in their life. And especially the women that are moving through different phases of their life and they're starting to look back on what could I have done differently to save more money? And what is the advice that I would give my younger self if I were actually given advice today? So here are some of the things that I hear out there. One is I wish I would have invested more money. I can remember, as a young gal, starting to invest in my 401k, and I thought this, 6% going into my 401k was so much money, and I had all these bills, trying to meet my, my house payment and my daughter's daycare. If I would have just taken 2% more and put in more, exponentially, that growth would have been off the charts. Many of us feel that way. We also would have wished to push for higher pay. Now, I have to give kudos to the younger ladies here because my daughter, she is very, very focused on this. Back in the day when I was actually, doing all, working and going, with my reviews and, I would just take whatever raise that they gave me. My daughter literally puts a presentation together every single year to make a pitch for what she thinks her raise would be and plenty of time for make this decision. She shows them how much money she saved them, how much money she made them, how she built efficiencies. I love this. I love bringing young people on my team because they like to take control of their destinies. And so as you're thinking about this, choosing for higher career, this is why we see job changes more often. It used to be back when I was getting hired, the longer you stayed at a job, the more, you were hireable. Now, when my daughter's hiring people, she's like, if you haven't moved roles, then that means that you're really not ambitious. So a whole different mindset with career management today. And then we look back and we say, I wish I wouldn't have taken so much debt on. Credit card debt is the worst thing on the planet. Paying 19% interest or 20 something percent interest on a credit card is the death of a financial plan because there is no way that you're ever going to get upright on something like that unless you're really focused on paying down debt. So just don't do it in the beginning. Start looking at where the debt is and always pay out the debt with the highest rate if you possibly can, because that's just money that you'll never see again. And then we wish sometimes that we lived below our means. Did we really need to eat out, 7 times this week? Do we really need to order, 10 things on Amazon this week? Amazon is really to me is like it's like this habit that anytime I need something, I may have not bought it because I was too lazy to go to the store and go get it, but I'm going to order it on Amazon and there I just spin it. It's a lot easier. So as you start thinking about how you're planning for the future, think about these things as this is day-to-day stuff, day-to-day decisions on making right decisions. Now, what is actually different as it relates to retirement planning and making plans for your future? Well, there's a lot of challenges. And we have to think about those challenges because they're real. This is not just the myths that we were talking about. These are things that truly have an impact. For example, the longevity gap. On average, we live 5 years longer than men. That alone means that we need to plan for more money to have in our plans, not less money. But then we also have the wage gap. We still make, and I'll show you how much in just a minute, we still make less than men do on average, which means that we're not being able to put as much away in our retirement plans. We also have the priorities gap, whether it's taking time off and taking time out of the workforce to work at home to raise kids, which is an honor to do. But women spend more time out of the workforce than men do, whether that is raising young children or taking care of parents. Both are priorities gaps and both penalize us in the future because a lot of those things happen in our peak earning years as well. And then there's also the confidence gap, and that's still a real thing. Do I know enough? Can I make the decisions? Do I dare? Do I just defer to my husband because he's better at it and he has more time to do it? Have all these things going on. But the problem is that, 90% of all of you on this call at some point in your life is going to be solely responsible for your own investment decisions alone. 90% of you. That means that 100% of us have to be ready because we don't know which one of us is not going to be in that position. So when we look at the longevity gap, at what age? There are 105 baby boys born, for every 100 girls. And at the age of about 45 years old, women begin to outnumber men. And by the time we're in our high 70s, we represent 61% of the population. 76% of people who are widowed are women. And as you start to think about that, we're not only taking over the world as it relates to the wealth control, we're actually taking over the world in the numbers of us that are out there as well. 78% of the centurions are the women that are over, or people that are over 100 years old. 78% are women. Now, as we start to think about this wage gap and what it actually means to us, we still make 82 cents on the dollar in the US. It's better in Canada. Canada is 89% on the dollar. But in the US, we still make 82 cents on the dollar compared to men in the same position that we're in. And women spend an average of about 44% of her adult life out of the workforce compared to 28% of men. Now, as we look at these, we call them penalties. They're really not penalties because they're life decisions that we make for an important reason. And if you think about what we call the motherhood penalty, many of us are making the decisions to stay home, and take care of our kids only because of childcare costs sometimes. Because if you look at the cost of childcare today and how much it continues to go up, I know for me, I was working, I barely beat out the amount that I was paying for child support for many years and what I was actually paying out and what I was making. And then I would start to contribute to the taxes my husband was paying. So, at some point, you have to ask this question, what is the right thing to do for our family? And especially if you have 2 kids or 3 kids, it becomes even a tougher decision to make. And then as we start to look at the good daughter or spouse penalty, when one of us is taking off work to stay home and take care of mom or dad, no matter whose mom or dad it is, usually 95% of the time is the woman in the scenario. So what that means is entirely possible if all of these things happen to us is that we could end up with 1 million. Actually, we just redid this number. This presentation hasn't been updated yet. It's actually up to 1.4 million of deficit that we might end up with when we're getting ready to retire. So not only do we have an earnings deficit because some of these things are during peak earning years, and when we step away, we can't continue to contribute to things that are tax deferred. So that means that we not only start out with less, but we're living 5 years longer. I'll show you some numbers of how that might look and feel. Lack of confidence is still there. 67% said that our spouse knows more, or they have too much more time, or there's not as much demand on their mind space and time as there is for us. Sometimes it's too stressful. I travel 4 days a week. I'm trying to unwind my brother's, estate. He died last year. I just got done with my mom and dad's estate. So as we think about all these things that are rolling around, how do we actually manage these things and take the time to think about us? Because many times we put what we need on the sidelines. 42% of us said we don't know where to begin. I don't know what questions to ask. I need someone to help me think about what I need to ask. I don't want to make a mistake, and I don't want to ask stupid questions. Be, let your voice be heard. Ask the questions that are on your mind. I'm going to give you at the end of this even questions you can ask. Danielle can help with these questions. How do you really think about what you want your future to look like, and what are the decisions and the priorities that you have today? And then how does that actually impact the future decisions that you need to make and you need to plan for? Taking time to work on your future is key, because you are the caregivers. You are the one that's going to be taking time out. How do you make sure you're covered so you're not a burden on your kids, so you live your life with dignity the way that you want to live it? And so as we look at the numbers, if you look at a man that has a 40-year career, let's say he's making $55,000 a year and he saves about 10% a year. At the end of this time with a 7% return, he may have a pre-tax retirement savings of about $1 million. And let's say he expects to be in retirement for 20 years, right? And what does that look like for him to generate monthly income? So based on those assumptions, he'd have, an income of around $8,400. But just because you live 5 years longer, that automatically, if everything else is equal, takes yours down to $7,600. I have to tell you, this is also one of the hardest things that my mother had to get her head around. Is she was getting, her when my dad was alive, she was getting her Social Security and my dad was getting his. When he passed away, that went to one payment. It was his because it was more, but it almost cut their income in half, and her bills were not cut in half. She still had those expenses. So how do we actually look at this? If you look at, a confidence gap and worrying about taking too much risk, or we might be, if we are risk adverse and we decide, I don't want to have money in equities, I just want to sit in the cash on the sidelines, that can have a dire effect. So making sure you're taking enough risk. There is risk in not making investment decisions as well. And then if you are making less, if you're making 82 cents on the dollar, that takes us down even more. So this is why having a plan, starting early on the plan. I mean, we have this. We thinking about it and planning for it. We're focusing on our money and our families and our finances and our spouses and our kids. A lot of things have changed since the pandemic. I saw a lot of priorities change with women. What it means as we're planning for parental care. What are the questions that we ask? How do I make sure that my kids are covered and I'm covered and my kids are covered if something happens suddenly to my spouse? How do I make sure that I protect my family more? How do I make sure that there's a plan if something happens to me, even when I'm young? Do I need a life insurance, if I'm 35 years old or 30 years old? Do you need long-term care insurance? What happens if you're moving in with your boyfriend, and do you commingle assets? All of these are questions that may be part of your day-to-day decisions that an advisor or Danielle can actually help you with. So it doesn't matter whether we earn our wealth, we marry into it, we divorce it, we inherit it, or we outlive it. Remember, 90% of us are going to be solely responsible with making decisions about our finances alone. 100% of us have to be prepared. So if you're not having conversations about this, one of the things that I did, I hang out with 10 women. It's our book club. Now, I will have to admit there's more wine in the book club than there is books in the book club. We have read books about wine as we're drinking wine. But, if I think about the life, issues that we have, we're very open with each other. There's 10 of us, anywhere from the age, because we're an older group of women, anywhere from 50 to 62. And if I think about the life changes just since they hit 50 is huge. Two of them have gotten divorced after 50 years old. Two of them have gotten laid off after 50 years old. So as you're thinking about your future, especially if you're young, how do you ask yourself, hey, what happens if I get laid off 10 years before I plan for it? What am I going to do? And even if you're younger, asking yourself questions around, what happens if I get laid off now and I'm out of work for a few years? What can I do to prepare for that? Because if you look at the groups that are getting taken out of positions now, is high earners that are over 50 years old and young people under 30 years old. Those are the top two groups that are getting realigned in their positions. So where do you actually start? Opening up the dialogue. Two of my other friends in that group, their husbands passed away right at 50 years old, 30 or 40 years before they thought that was going to happen. And they're starting over. So how do I actually prepare for these life things? How do I actually talk to someone about what's involved? What are the what if scenarios? What about if we make decisions and we don't get it right? How can I have more decisions? And if you are married and you're deferring to your spouse, how can you change that dialogue to be more involved? And if you have an advisor or you work with Danielle, don't ever put your advisor in a position that they're trying to get to know what's important to you at the worst time of your life. Meet with them now, help them understand what's important, be involved in the decisions. Even if you don't think you're prepared to do that, make sure you're there, at least listening and making sure they know what's important to you over time. Now, I keep saying, start young, start now, don't wait, right? Put as much as you possibly can in. The power of compounding, of growth in your portfolio is one of the most magical things that you'll ever experience in your lifetime. And it can be a lifetime changer. Let me give you a example of this. So if you are, and take this number and think about it, we just do it to make it easy math for me, when I'm presenting it. If you were to invest $1,000 a month at a 7% return, if it's $10 a month, if it's $100 a month, if it's $500 a month, you can still look at these numbers and see exponentially what happens. But let's just use this math. You're putting in $1,000 a month or $12,000 a year, right? And you get a 7% annual return, a balanced type of refund, not taking too much risk, taking enough risk though. And over a 15-year period, you would have put in at that amount of money over a 15-year period, you would have invested $180,000. Based on a 7% annual return, that would have grown to $316,000. If you allow that to compound over the next 25 years, it takes that 300,000 you would have put in over time and it becomes 810. You see how exponentially this gets bigger and bigger. It's that power of reinvesting back into your plan. And then if you put in over a 35-year period, $420,000, that ends up with at a 7% return, a 1.8% return. Start now. That compounding is magical and it can make a difference of a completely different lifestyle for you and your family over time. You also have to think about getting organized. Now, when my mom passed away, and you think about this too, for your younger gals on the call, think about this for your parents. Have you had this conversation? Because my mom and dad, several years back, both of them, my father passed away, and several months later, my mother did, very different reasons and issues. But when I started really looking through their finances, I would talk to my dad and I would say, Dad, because I was a former advisor, and I would say, Dad, you know what, we need to make sure your will is up to date. And he would say, I'm from North Carolina. So my dad would say, Girl, I got it covered. Don't worry about it. And the reality was, as I kept asking him and he kept saying it to me, in reality, when he passed away, he did not have it covered at all. So don't let your family off the hook. We have resources that can help them get organized. We have resources that can help you get organized. And being able to say, okay, where are things? The things that I was helping my mom with was, who's the car insurance with? What is the passwords or a PIN number on a credit card that my dad used that she didn't use? As a matter of fact, I found a box with $5,000 in cash under the sink behind a drawer that my mother didn't even know was there. So I was the one digging through things. And for clients that I had, I was the one going through, looking through file folders, trying to find things to give me some indication of what's where. So as you think about your life, this organization of all the things in your life, how do you actually keep them organized? There's resources that Danielle can help with that helps you think through this. Little things like your social media passwords. You know, when my grandmother died, there was a teapot that she had gotten. This thing was is 75 years old now. She got it on for her wedding day. No one in the family knew that story but me. So how do you make sure the things that are important for you get passed down? How do you make sure stories about your family gets passed down? You know, my brother passed away last year and he lives in a different state, so I didn't know his friends. And the only way I knew who to even invite to the funeral, and I'm sure I missed people that weren't on social media, his neighbor had helped him set up his phone and remembered his password, and I was able to go to see who had texted him and what to do. That's the only way that I could even tell anyone what had happened to him. Don't put the people that care about you in this position. Help them know what you have. Help them know what you want to happen. For me, I have a family planner set up that has who should be called if something happens to me. What are my social media passwords? As a matter of fact, I have a last post to go on social media. It's pretty snarky too, by the way. You know, I figured I have all these things I didn't say when I'm alive. I got some things I'm going to say when I'm not. So I want that last post to happen. I also have letters in my planner to people that I care about. So they know they can look at it at a tough time of their life and know the joy that they gave me. So this organization is critical. And working with an advisor, whether you're already working with Daniel or you're thinking about this or you're working with someone now, you know, being able to have a financial quarterback, someone to help you think about all the things that they do, whether it's looking at your portfolio, rebalancing asset allocation, behavioral coaching to make sure you're making good, rational decisions about the markets and about your finances and about your financial plan. You want to make sure that what they're doing for you is customized for you and what you and your family need now and in the future. And you also want to make sure that you're not giving as anything that you don't have to taxes and that you're keeping as much as you can, because keeping a couple percent in your pocket that can compound over that period of time is a powerful thing. And making sure you have a financial advocate to be able to help you, but also making sure that your voice is heard and that you're getting the right questions asked about your family and your relationships and what's happening there, about who's impacted by decisions you make and what impacts is there. And also about your health. You know, what are the things that you would want to happen if you can't, for some reason, make decisions about yourself? How are you protecting yourself if something happens to anyone else in your family? Your career, what happens if you do get laid off? Have you prepared for what if scenarios of things that might go wrong that you didn't anticipate? And then there's lifestyles. How do you want to live your life? What are the decisions you're making today to make sure you do have enough for the future? But our priorities have changed over the last 5 years. We're making very different decisions about where we work, how we want to work, who we want to be around, where we want to live. These things are things that your advisor needs to hear about, and the things that you're passionate about in your community, and all those things that might be coming up that someone should know about. Now there's questions, and I'm happy for Danielle to share these with anyone. You know, if you're in your 20s and 30s, you know, thinking about maximizing savings opportunities, should you be going into your 401k, which the answer is yes to that, by the way, and your IRA. You know, what about childcare related costs? What about, you know, thinking about if something happens to you and who's going to take care of your kids? You know, where should your emergency fund be and how much should you have there? And what types of investments at your age should you really be considering? Because they may change over time as you progress through life and have different priorities. And then how can you manage student debt and debt in general? And do you need, I hear a lot of younger people tell me they don't need insurance coverage. Well, you might, depending on your situation, especially if you have children. And do you need a will? Everyone needs a will. My brother died intestate, and just getting anything done is nearly impossible And it's not fair, whether you think you have anything or not, there are decisions that have to be made that a will could help your family with at the worst time of their life. As you're getting older in your 40s or your 50s, that's still young to me, by the way. And as you're thinking through this, is how do you plan more for retirement? What about catch-up contributions? What about Social Security? What if it's not here? I just read an article saying that we've now dipped into principal in Social Security. Are we going to privatize it? What happens there if it goes away or if it gets reduced, or where our ages keep being pushed out of when we can get maximum benefit? What about funding for college for our kids? What should our asset allocation be versus what it was in our 20s and our 30s? Aging parents, how can I make those decisions? And what are the estate planning things I really need to think about right now? Remember, my two friends that their spouses had died right at 50, the two that got divorced a little over 50. These are questions that you're going to see. And whether you're in your 60s, 70s, or 80s, of how do you want to spend your retirement? Where do you want to spend it? How do you actually factor in Social Security? Are you going to lose one of them if one of your spouses die? How do you begin to scale down, or do you want to scale down? What do you want your life to look and feel like, and where do you want to be? And then what do you want your legacy to be as well? And do you have enough to live your life with dignity? Now, the final word is know what matters to you. And as you're talking to your advisor or as you're working with Danielle, please be very upfront about what that is. And there's the exercises that she can take you through, or your advisor should be taking you through, to help you really think through what is important to you, what are your priorities now, and what is it that you need to do now to address those priorities. And still keep in mind the future. Get organized, get your stuff together so you know where it is at all times if something happened to you. And then don't be afraid to ask the questions and talk to people about money. Invite others and experts to the conversation. So, Danielle, I'm going to stop there. Let's see what kind of questions we have.
Thank you so much, Tina. I hope that you feel empowered. I feel empowered every time we have this conversation. If you do have a question, you can drop it in the chat. It's okay. Um, I think it's empowering. I was listening to a podcast where the biggest demographic of homebuyers right now are single women. That's so empowering. We have different needs, right? I love that you shared your needs, Tina. Thank you for sharing that. It's so important to understand, hey, my needs differ from Tina's needs, right? My book club that I just joined, the girls finally convinced me to join. They had tons of finance questions the first book club, and it was all about, I have daycare, a mortgage, do I work, do we pick the daycare, do we pick the mortgage, or what do we do for raising a family? Some of the women have lost their parents too early in life unexpectedly. Some had life insurance policies, some didn't. We're getting married. There's a lot of questions about, what do you do with the funds that you've earned on your own, without that person, and how do you navigate those conversations? So it's really important that we understand your needs. Tina hit on it so well at the beginning. I am constantly amazed by the equal opportunity for women to get a credit card. That didn't happen until not that long ago. My Amex is my best friend. I take most of my flights because I have that credit card. So it's crazy that the Equal Credit Opportunity Act just happened. It happened too late in American history, but I'm so fortunate that as women, more are going to school, getting degrees, and of course, we're going to need resources like a credit card. So, thank you for sharing all of that. Doesn't look like we have any questions rolling in. If there's something that you think about, you are more than welcome to send over an email or chat offline. But again, thank you so much for taking that time to invest in yourself and invest in the future of you, your family.